How many of you are blockchain developers? Come on, yeah, okay. How many of you have founded a business that's run an ICO? Yeah, I thought there'd be a few. Okay. So my challenge here is to actually be all things to all people. And as I currently work at PwC, you wouldn't be surprised I've got a PowerPoint presentation. That's got far too many slides for 15 minutes. And I'll cut through quite a few of them. Now, I'm going to do this. Yeah, George. Yep. George is my glamorous assistant tonight. It doesn't take much to Google Bitcoin and bad quotes. Been quite a few recently. It's done nothing to the price action in the market. That's one I particularly like. It's a couple of years old. I'm not going to read it out for you. You guys can read it. But I also like this one. You can't stop things like Bitcoin. It will be everywhere, and the world will have to readjust. World governments will have to readjust. Now, everyone who's been in the crypto space the last few years, and we're coming up to our 10th anniversary of Bitcoin next year, will embrace that statement. I think those of us who are at the libertarian end of the spectrum, the crypto anarchists that are a bit further over, Rocky, and even those who are coming to the party late will realize that this is game-changing technology. I hope to explain a little bit why over the next 13 minutes. So I want to try and address these things. I think this probably covers the gambit of crypto. It'll be a bit of a whistle-stop tour. Please feel free to ask my beautiful panel over there the hard questions afterwards, because they've got far bigger brains than me. Bitcoin actually started a long, long time ago. The technology on which Bitcoin is based has been around for decades. Distributed database technology, crypto, hashing algorithms, all of that has been around for a long time. 98, a guy called Nick Szabo first started talking about things like smart contracts. He invented something called BitGold. But it wasn't until 2008 that this pseudonymous Satoshi Nakamoto published a paper, as we probably all know. Bitcoin, a peer-to-peer electronic cash system. 2008, October 2008, was was kind of the epicenter for everything that's happened ever since. 2009, the code first hit the web sphere in open source format, and it started getting people excited. Very, very slowly to start with, but over time, things happened. It reached parity with the US dollar after a couple of years. It started getting invested in. Things like Silk Road brought it to notoriety because its pseudonymous nature, its privacy that is built in, enabled more nefarious uses, which is always the way with new technology, I think. Hit a all-time high at that point of 1,242 US dollars, which was remarkable after a few years. Then Mt. Gox got hacked. That's the biggest exchange, the biggest crypto exchange at the time. Price fell, then it started picking up again. Distributed ledger technology, which is what Bitcoin is based on, or blockchain as kind of commonly known, was being adopted more widely. And I'll explain why that started picking up. Through 2015, it's getting the regulators' attention. Again, more and more bad press usually, but also good press. And then by maybe 2 years ago, things started really working for both Bitcoin and blockchain. And I'll talk a little bit about that. This is in the scribble at the bottom. This is slightly accentuated, but that's the The price chart for Bitcoin. This was Sunday, I think. We had a little bit of a drop on Sunday, but it was up to 6,000 from a peak of 7,300 up there. Today, someone probably can tell me, I think it's around 6-7 today. And this is the last year. So all these little peaks and dips, always followed by big bull runs. Amazing stuff. The prices you can see on any crypto exchange. We've got Lasanka there to actually talk to us about it later. Show of hands again. Who wants me to tell you how Bitcoin works? Not very many. Speak to me afterwards. I'll run through this very quickly. Bitcoin is a decentralized peer-to-peer electronic cash system. It's based on a network of nodes with a consensus mechanism that prevents you double spending, issues what is called a Bitcoin, but it's not really a coin, allows you to transact with other people. So I can transfer value to anyone else who has a Bitcoin wallet. This is a particular use case which used to be used, and this is quite an old slide because you can see it's a shopping use case with 5 Bitcoin, which we buy you a Tesla these days. But I'll talk you through that later in the interest of time. I'll leave that. Key thing, the miners who are really key to this, they are the securers of the network. They are the organizations, the computer power that creates the blocks that go on the blockchain. Cool stuff. Right. Bitcoin was released, as I said, in open source. What does that mean? It means the source code is available to anyone who wants to download it and run it. The idea is you can download it, run it, set yourself up as a new miner, and create this fantastic new technology as a network across the world. What it also means is you can download the source code, tweak some of the things that you don't like, maybe the block size, maybe the block reward, the difficulty algorithm, maybe even the consensus mechanism, and then publish your own coin. I can create Rockcoin. If you think that's a great idea, you can take my code and we can create a network of 250 Rockcoin equivalents of Bitcoin. I'm sure that wouldn't be quite successful. But many people have done that. And this is from CoinMarketCap a couple of days ago. On CoinMarketCap, which is a listing site for all tokens of this sort, 12,078 cryptocurrencies. Now, they're not all Bitcoin derivatives, but that's where it started. And around 2011, this is what started. People started downloading the source code, creating their new digital tokens. People started getting excited. You know, you could have Litecoin, Dogecoin, Hashcoin, and all sorts of different coins. I'll talk about some of these later because these aren't derivatives. These are actually new cryptocurrencies based on similar technology. But you'll recognize Bitcoin, Ethereum, Bitcoin Cash, Ripple maybe, Global Payments Network for bank-to-bank transfers, Dash, Litecoin, Monero, Neo. These are all really important ones because their market cap, which is the number of tokens multiplied by the price of that token, is very high. Nearly $200 billion US of market cap in the crypto space at the moment. Astounding in 10 years. But look at the volatility. Look at the graphs. You need a stiff print before you start playing these markets. Or not, the same.
Is everyone right?
Not going to talk about hard forks. The hard fork debate you may have heard about, you can ask questions about later, but Bitcoin itself and the nature of the blockchain means that anyone can decide to split off, not create a new coin and start from zero, but take the blockchain from where it currently stands and then create a new version of Bitcoin, potentially. And we've seen that with Bitcoin Cash and Bitcoin Gold and others throughout history that have died. But these guys can explain how that works, because you'll have heard enough of me. 5 minutes. Thanks, George. Let's squeeze it out. Blockchain. Spoken about blockchain. And for those, who wants to know how blockchains work? No one. Cool.
I know some people there.
Let me jump forward. Blockchain in Bitcoin world is what it says on the tin. It's a chain of blocks. Blocks are a data structure, which are containers which you put transactions in. The transactions can then be hashed and proven and put into a block. The miners who I spoke about earlier create these blocks by actually solving a puzzle, a computational puzzle, which needs lots of power, lots of consumptive energy. And then if they win that puzzle, they get the opportunity to add the next block to the blockchain. That then returns to them Bitcoin as a reward. In the Bitcoin example, that's how Bitcoin's created, putting a new block onto a blockchain. All of these transactions then get put into a block. It's far more difficult than that. I'm moving on. In terms of use cases, of course, Bitcoin was designed to be an electronic, peer-to-peer, electronic cash system. What no one really considered was all the other types of use cases that it could be applied to, and many that aren't appropriate. So the furore over the last few years about blockchain itself is, well, we can solve world peace with this. We can create end-to-end supply chains where no banks are used. We can do this, that, and the other. Many of which may well be true. There are many organizations that are looking deeply into different use cases. These are just a few that can be applied to the financial services industries. Moving value, key, storing value, lending value, basically everything that banks do can be done on the blockchain. So do we need banks? Leon, do we need banks? Crypto bank. What I'd like Bocky to talk about later is smart contracts. Now, smart contracts is the next stage of blockchain. So when very smart guy called Vitalik Buterin decided that Bitcoin was a bit too limiting in terms of programmability and doing some of those other use cases, he designed Ethereum. Ethereum has a programming language built in that enables it to use all the properties, all the beneficial properties of blockchain, but put a Turing complete programming language on top. Now, smart contracts allow all sorts of really, really weird and wonderful things to happen, all the way to the nirvana for the crypto libertarians, which is let's decentralize completely. Let's remove governments, let's remove hierarchies, let's remove organizations where everything's centralized and allow the people to decide. We're not quite there yet, but 1 minute. I'm gonna bust your 15 minutes, but I won't get into ICOs. So there are lots of words related to blockchain in particular. Lots of organizations that are focused on it. You may recognize some of these. Hyperledger is a Linux Foundation project for open sourcing projects which are related to distributed ledger technology. I've mentioned Ethereum. Corda is the distributed ledger that's been created by the consortium, by R3, a consortium of banks. Multi-chain I really like, because it's a multi-asset version of the Bitcoin stack, Ripple I mentioned earlier. So some of these, you'll get the picture. This isn't everyone, but this is some of the big players in the space, and it grows day by day. ICOs, we can talk about through the questioning. Is that okay, George?
Yeah. All right, can I please give a round of applause to Ross?
All right, thank you very much for that highly condensed overview of this landscape. Now, what we're going to do is, while we're switching over, and I get Craig Wright, who's one of our panelists as well, we're going to try something called real-life peer-to-peer. So can you please look to the person next to you and introduce yourselves?
Hey, Craig. Craig, can you hear us?
Yeah.
Say hi.
I can hear.
Yeah, you can do it. Hey, Craig,
Yes, how are you?
can you shift your camera so that you're more in the center?
I can. How's this?
Yeah, all right. So let me just make sure the audio is up.
Mm-hmm.
You see people taking pictures with you, huh?
Yes, it's the weirdest selfies I've ever had.
All right, so we've just put you up on the big loudspeaker, so you'll be connected now. And yeah, I'll start getting people together.
Great.
All right, everybody. Everybody get some more selfies? Craig, you're getting more selfies. All right, guys, I hope you have learned a lot about the person right next to you. We have been successful. Hello! Thank you very much, guys. Sorry for that. But we do want to ensure that we get as many of your questions answered, and also we do have Craig Wright live streaming in from the UK. All right, he's a guy that's not very easy to get into any of these type of events. All right, but before we do the introduction of Craig Wright, of course, it's important that we introduce a few of our local players who are equally as talented and magnificent. So starting from Lasanka. So Lasanka, you can just wait for everybody if that's all right. He's representing the exchange part of this panel talk. He has 10 years experience in financial markets as a trader, investor, advisor, and media commentator. He's a co-founder of Tat Capital, corporate finance and FX advisory, making crypto easy and accessible through Independent Reserve, the digital currency market. Who here has heard of Independent Reserve? There you go. All right. Yeah, we can give a round of applause for that. All right. And next to Lasanka, we have Tobbias Abbey. Raise your hand. There you go. Thank you very much. An investor in cryptocurrency projects, including seed and pre-sale stages, a background in derivatives, trading, and financial markets. He's worked for the past 10 years as a proprietary trader, mainly in SFD, specializing in fixed interest markets, and he's also run discretionary and algorithmic trading strategies. Can we please give a round of applause for Tobbias? You haven't even spoken yet. You're getting applause. Next up, we have Buck, right here. Give it up for Buck. Representing the Ethereum side of today's panel discussion. He is the director and consultant of Actuary and a quantitative software developer with over 28 years of industry experience. He's been working with clients from banking and corporate treasuries, investment managers, government entities, exchanges, and financial software vendors in Australia, New Zealand, Asia, the UK, and Europe. Yeah, Ethereum is going to be good. Today's going to be a good discussion. We were supposed to have another panelist by the name of John Pellew, and unfortunately he had to back out last minute. He would have been representing the ICO side of tonight's talk, so unfortunately he wasn't able to make it. And of course, without further ado, representing Bitcoin, or Satoshi's Bitcoin, Dr. Craig Wright over here. Can we please give a round of applause for Craig Wright?
Thank you. How are you all tonight? I hope. So I hope the other talks that I've unfortunately missed have all been great for you and that you've enjoyed. So yeah, welcome. I guess what we'll be talking about is some of the things you've probably heard. We'll go on a little bit about why Bitcoin Cash, what we can expect to see, what we're going to be doing, what nChain does a little bit, and some other things, as well as letting you have some questions. And I'll probably have my normal no comment to many of them, but we'll go from there.
All right, thank you very much, Craig Wright. And well, he's already done his intro for him, and I'm sure a lot of you already know who he is. And if you don't, you will find out very quickly through this discussion. So to get us started, thank you for all of you as well for inputting essentially what your kind of level of experience is with this space, and also giving your questions. So we had about 50% at a beginner stage, 30% intermediate, and 20% advanced. So over the next hour, we've actually broken it up in terms of time based on that. So the first half an hour is going to be kind of beginner-based questions. I'll be sharing those questions, and of course we'll run with it, and then we'll go into the more advanced as we go over time. Are you guys ready?
Yes.
Are you guys ready?
Yes.
Thank you very much. All right, let's get this started. I'm just going to keep my head like this. Microphone. Okay, you can keep that, and I will sit like this so you all can see Craig Wright as well. Okay, first question. Wow, okay, this question was from Steve Gopelin. Is there a Steve Gopelin here? No, but that's okay. Steve, your question is going to be asked. Now, this is an interesting one, and because 50% were beginners, the basics of Bitcoin, how does it work? And I think we'll probably start with Craig on this one. Craig, I hope you have a good, shortened description of that for the audience, the beginners.
Bitcoin is a near complete graph. Now, what this is what people commonly know as a small world network. Now, the error people have is believing that it's a mesh. When you actually look at it, it's a gossip network that remembers. One of the things people are failing to understand is when you actually seed a node, mining, whatever else, you also remember and collect new nodes, and each of those exchanges. So the concept that it is a random graph is actually false. In a random graph, you learn over time, and whenever you restart a node, you would forget. Bitcoin doesn't work this way. It actually learns and collects the topography so that it can become effectively what is in epidemiological models and network models, a giant node. That means the distance is extremely low. So the common concepts of things like lightning, where you have many hops, or the internet, is actually false. It's incredibly efficient. People just don't actually understand the mathematics behind it terribly well. It's a wide area within math. It's been around since about the last 20 years with Strogatz and Newman. They actually won themselves a few prizes and got into science on this, this sort of concept and design. And this is the heart of what Bitcoin is. So it is an efficient distribution network. What that allows is for people to get a peer transaction, such as either money or smart contracts or whatever else, sent to the verification part of the network, which is the miners, which then settle that in an immutable blockchain that can never be changed. Once that occurs, you have a transaction that forevermore is able to be audited, able to be reviewed, and has happened without having to have external infrastructure, without having to have third parties. That fairly much is the heart of Bitcoin.
Okay. Thank you very much. Great. Do any of the panelists want to give a shot at simplifying that even further, if you can? Pass the mic.
Thanks for that, Craig, and it's good to see such a big room here today, and thanks to IRESS and all the organisers. Fantastic stuff. I'd like to just give a very personal example. So there's a developer that we've been working with for many years. He lives in Russia, actually. We've been working with him for about 15 years. His name's Alexei. He's a family man. He's got 2 kids. He's got a wife. He's got to pay to send his kids to school, all that sort of stuff. And for the last, say, 14 years, we've had no difficulties paying him. And recently, there were some geopolitical changes that made it very difficult for us to pay him his weekly or monthly salary. So I called around a few of my friends at banks. I called around my friend Bo, who's in up the back there, who works at AFX, and a few other FX brokers around the place. And there was no one that was willing to help us pay Alexei's monthly salary. So, but there was Bitcoin. We were able to pay Alexei his salary in Bitcoin. We knew, we transferred the value. He was able to see it. The transaction was essentially confirmed in 10, 12 minutes. There was another confirmation 12 minutes later, and he was paid. He was able to, pay for his kids to go to school, food, shelter, all that sort of stuff. And that is something that gives us incredible value. That the fact that, we can transfer value to another part of the world, and that's been, that didn't need to rely on banks or regulations, or there was no intermediary bank that was stopping the payment. And that to me is something, that is extremely valuable, and that we haven't really seen in our lifetimes. Very exciting for me.
Good example. Next question. We've got so many questions, it's ridiculous. This one is to everybody. Can you explain how blockchain technology itself is secure from hacking? Who would like to take that one up? All right, we got Bach.
Hello. Difficult. So, blockchain, how is it secure from hacking? Well, that's the accounts. Each account, so it's like a distributed database where you've got entries for each account. And to change an entry in the distributed database, you need a private key to sign a message that you own the private key and the corresponding public key. And that signature mechanism is the underlines to the security model of the blockchain technology. So if you send a transaction and you don't have the right private key to sign the message, your transaction will be rejected. So only authorized transactions can be mined by the miners. Then you've got, on the network itself, you've got the miners that are keeping everything in check. And it's sort of randomized. Well, it is randomized by your computation power. It's actually a very simple calculation that everyone is competing in to find a number within a range, a small range. And when so all of us, let's say we're all miners, we start calculating random numbers, And the first one to find it in a small range gets to mine the block. And because of this algorithm, any one of us could mine a block. And the more hash power, the more computation power you have, the more chances you have in mining the block. But because it is sort of randomized by weight of the computation power, no one person has control over the data. That's how the network keeps itself secure.
Tobbias? The thing I'd add to that is the network's actually secured by the SHA 256 algorithm, which was developed by the NSA, which is the National Security Association of America. So it's a very well-proven cryptographic technology that actually underpins the security of the Bitcoin network.
Sorry, for beginners, SA 256, what does that mean?
SHA 256,
Yeah,
it's a hash algorithm. So it converts any data or any changes to data into a hash. The machinations of that are actually very hard to explain because it's highly complicated. I'm sure Craig knows more about it than most people in all the world, but it is a well-known and well-proven technology that was developed by the military to secure communication. So
it's a one-way trapdoor function, which means you can take any variable of any length, and no matter what, you have effectively a near random output of a set length value. So you put any input and you always get a 256-bit output with SHA-2 algorithms. The result is that if you change one bit, one number on the input, you cannot determine the output in advance. So it's a one-way function. If you're given a number, you cannot find the value that feeds to it. It's highly unlikely that that would ever occur. Mining is all about trying to find values that match a certain number of inputs.
We will go over the mining stuff for people who aren't familiar with crypto mining. I think it's worth just saying, I think I'm correct in saying that the Bitcoin blockchain has never been hacked in all that time. The exchanges have been hacked, so those are the entry points into the blockchain for those who want to convert fiat currency into crypto. But the blockchain itself is kind of the ultimate secure distributed data store, because all of those nodes have to agree that that longest blockchain, that longest chain of blocks, is the one that they're following. And if any of them get out of step because of the application of this SHA-256 hashing cryptography, then they get ignored and the chain marches on. So it is immutable, it is incorruptible and untamperable in a public proof of work consensus-driven network. When you get into private blockchains with fewer nodes and other ways of tampering, then you have to apply different types of security.
all right. Yeah, great.
What I would add is it's not the blockchain itself that is the issue. It is control of keys. So all of the attacks, all of the exchange compromises, whatever else, have been down to key theft. If you control your private keys and you do that securely, then you're going to be safe. One of the things we're going to release in the coming year is threshold technology. What that will allow is, with a standard type 1 address, we can have schemas that are more effective and more efficient than the current multi-sig pay-to-script hash type schemes, where multiple parties are involved in protecting keys. And that can be as extensible as you like. And no one would even know that you're involved in a threshold scheme or how it's configured from the key. Not like things with BitGo where people can tell that you're using BitGo. There'd be no differentiation. That will then allow people to have things like smart card plus phone plus something they remember plus an exchange that backs things up. And you can have as much sort of differentiation as you want. The other part of that would be, by splitting the key into several areas, you then also have to attack several areas. So if you compromise an exchange, you never take all of the funds. You would have to compromise the exchange and the person, for instance, and that will make things a lot more secure. So we're going to be, we're in the process of having that built, tested, and all the rest at the moment. And yes, it's patented, but we're also providing it for Bitcoin Cash. So Jimmy and others in nChain are in the process of licensing it so that it will be free to use in Bitcoin Cash. So we're giving that away to the community. No, we don't want to give it away generally because we're focused on Bitcoin, and that doesn't mean altcoins. So I'm not interested in helping altcoins. I'm interested in helping Bitcoin. That's why we're patenting things. Look.
Thanks, Craig. Thanks, guys. Next question is from Stephen Brown, and this is a good, more general question. Why would I want any form of cryptocurrency instead of cash or gold? Feel free, anybody.
Well, what can you do with gold? You can basically put it in a vault and hope that it's still there. The gold standard was actually interesting in that there were only 40% in the early days of the amount of gold held. And by the time that Nixon took America off the gold standard, there was 5% of the recorded gold actually held by America. So for every 1 ounce, the Americans had sold 20. So that's gold. You can hold it yourself, but then you've got to actually hold it. It's difficult to transfer. It's difficult to take overseas. If you travel through Japan, you'll notice there's a whole lot of, or even Tokyo or anything like this, a whole lot of anti-gold smuggling notices. If you take more than 1 kilo of gold, they'll arrest you. So gold is difficult, whereas Bitcoin, it's not even a physical location. So you can move out of a country, have something set up, get to another country, and there's your money. So you can't really spend gold. Contrary to what people say, gold was never actually currency. Gold was a backup for currency in a few places. Silver might have been, and copper coins, but gold was never, ever in history used by common people ever. It was only used as government payments for paying large armies and soldiers or other such things. Gold is basically a backup mechanism for very large transactions. And it's difficult to move, it's difficult to store, it costs a lot of money, and everyone remembers the history of people who have a lot of money, like the Medicis, and they seem to forget the average common person. They forget that in Britain there were tally sticks. In medieval Europe, it was actually, there was a whole network of bankers run from places like Florence and Venice that would tee up once a year at the different meetings, all the debts and settle, and only the end settlement was paid. And this was done by pieces of wood, like tally sticks, that you'd break them in half so people couldn't easily forge them. So why is it better than gold? Because you have a simple payment mechanism and a store of value.
Yeah, I'd just add to that that money in value itself is very much a human construct. Gold is only willing what someone else is going to pay you for it. And the same with money itself. Bitcoin obviously has a value. It has people that are willing to buy and sell it. And that value is at any given second what that value is. The harder thing, I think, to explain than Bitcoin and blockchain is what money in the bank in a fractional reserve banking system actually is. That is a much deeper and more complicated.
Awesome. Anybody else want to add to that? All right. Just a quick show of hands. How many are feeling more confused than when they started? Be honest. It's okay. Thank you very much for being honest. Anybody else? All right. Great. Okay, cool. So just trying to, make sure that the audience as well, guys, if for us, we're quite used to this space. So, if it gets a bit out there, feel free to try and simplify it even further. Analogies, Craig, I know you're good with analogies. You could use those or other examples like Lasanka did. So thanks for sharing that. Next question, we have an Ethereum one. This is from Walid Abu Haloun. People say Ethereum could dominate as a future platform of choice for cryptocurrency. What is the panel's thoughts on that? How do you pick the ICOs that are most likely to to succeed? Okay, there's a lot of questions there. We'll stay with that one. What is the panel's thoughts on Ethereum dominating as a future platform of the choice of cryptocurrency? Great, not you. Not yet.
Sorry.
Yeah, go, Box. Box gonna go.
Hi, I'm the Ethereum fanatic here. So Ethereum is a beautiful system. You've got a secure blockchain platform. To me, it's like a giant box of Lego Mindstorm. You're working to put all the pieces together to see what you can build. And you can build shitloads of things. So the first use case currently is the ICOs. And you get ideas that are being funded. Some may fail, some may continue on, but it allows ideas to be funded. So we have got Linux, we've got lots of open source systems. All these some of these are unfunded. And some of these types of projects are gathering funds through the Ethereum ICO methods, where you write a smart contract, and it might be about 1,000 lines of code, where people can contribute ethers to your smart contract, and they get tokens. And the tokens then become tradable. So the crypto tokens are, if you write the smart contract correctly, as secure as the ethers on the platform. And it allows you to have lots of funding sources provided to the crowd sale, and transaction fees are relatively low. So you might pay 50 cents or something like that, although recently I've stuffed up and cost someone $5,000 in transaction fees. And yes, so it allows lots of transactions at cheap costs to be executed, to do things on a blockchain. And I used to work in the financial industry, where you write small bits of code to change data in a database, and then it gets exported to another system, and verify, reconcile, and do lots of things. So a bank like, the big four have hundreds, probably 600 systems where it's all joined together with shoestrings. With Ethereum, you write one smart contract, and it does almost everything you need to raise your funds, and then you can trade them on an exchange. Yes, you get liquid tokens very quickly.
Yeah, great. We'll leave Craig to last.
Yeah, look, I think what Ethereum's done and what it is doing and what it can do is really amazing, and it shows the power of the capability of blockchain technology. I think there are important limitations at the moment, and it's important that it can get through some of these scaling issues and have higher throughput, because what worries me a little bit is if some of these projects succeed, if they became as successful as they propose to be, the transactions will almost overwhelm the network. And you can see that when a popular ICO is being funded, that there's so much demand to get the money in, and people are upping the gas prices, that you're actually overwhelming the network. And I believe that's something that they definitely are addressing that by looking at sharding and moving to a proof of stake mechanism, which I know has its own controversies. But I'm sure you have more experience about what exactly is going on here. But I think Ethereum, it's very important that it figures out how to scale. So.
Sorry. Yeah, the time will come. So there are plans in place for the throughput to be increased. It's slow at the moment. It's very much still a developer system. There's some sexy technology coming out. You've got the plasma, you've got Raiden, few different the sharding mechanisms. Hopefully it'll be solved sooner rather than later, but there are plans in place.
I think from a technology perspective, it's an incredibly elegant solution. Putting a Turing-complete programming language on blockchain is fantastic. I think where Ethereum has problems is in its governance, and the fact that if something goes wrong, it can roll back, which then kind of undermines the whole immutability aspects. You can then potentially fork that whole network. So it becomes many things. And although from an engineering perspective, it is pretty good, despite the scalability and other challenges, the fact that a Bitcoin or a Bitcoin-like network is decentralized, truly decentralized. Something like Ethereum has a governance, an oversight around this very small group of people who then determine whether or not a particular part of the blockchain or fork of the blockchain is the real blockchain, and then if they don't like it, they can roll it back. That happened after the DAO debacle last year. It's probably about to happen very soon. I'll probably deny this, but once you start making an immutable blockchain only practically immutable, then where do you stop? When do you roll it back, and when do you not roll it back?
So technically, the Ethereum blockchain was not rolled back. In block 1920000, the accounts where stolen funds were held and other non-stolen funds were simply moved to the curator's multi-sig and then dispersed back to the original investors in the DAO. So it's not technically a rollback, sorry.
But it did force a split. It forced Ethereum Classic to be born, and that split the community.
That cleared the Ethereum community of all the rowdy people. It is quite pleasant now.
A bit like Bitcoin Cash, Craig.
I'd say the other way around. Bitcoin Cash is not the fork. The fork is what people think is Bitcoin Legacy. We don't have SegWit.
Yeah, Ethereum, would you like to talk on Ethereum, Craig? I suspect not.
Ethereum came about because in 2013, when Vitalik wanted to create smart contracts on Bitcoin, he was told that they were spam. Non-standard contracts were introduced before that to stop people doing things like tokenized coins and whatever else. None of that's going to be an issue in Bitcoin Cash. The script operations will be opened up again, and everything that Bitcoin can and should be will happen. There will be no one taking over and telling us that things that a few people don't like gambling or whatever else, is spam. So we're going to open that up. We've just, at nChain, we've just funded a number of universities doing, so far, a test up to 1 gigabyte. We did that because it validates what we've already done independently. We've tested up to 380 gigabyte blocks right now. We've tested 1 million transactions a second and transaction sizes up to 20 megabytes. Super complex scripts, basically ones that can run operating systems. We have created, there was actually an old operating system in Forth. Back when I was in the Australian Air Force, people may not understand, but the F-18As were actually encoded in Forth. It's a very fast operating system. It's also one that very few people understand anymore. It's only a few old buggers. It's like assembly code. It's hard. So one of the things that will come in the next couple of years will be a more secure version of high-level language, some of which is being worked on now, and other things will be coming out there. So scaling, I don't see it as a problem. We can handle, we can actually help people scale up in the next few years on Bitcoin Cash to over 1 million transactions a second. That's basically all of global commerce times about 50. On top of that, we can have complex scripts. On top of that, with payment channels between that, we can scale each of those transactions 1,000 times, which effectively means about 1 billion transactions per second, which means we can then have all derivatives, all complex trades, everything. That means high frequency trading. It means everything that happens globally. We'll be releasing a number of things such as methodologies to allow pegging of assets, not the way that colored coins did in the past, but so that you can't lose your assets. So that colored coin then stays as a colored coin unless you intentionally write a raw script to destroy it or lose it. which means you stay if you have a pegged currency with a pegged currency, and it all happens on chain. So, sorry, Ethereum, but Bitcoin can do everything you can. It always could, and now we don't have developers stopping us. Thank you.
Yeah. That's cool. As an Ethereum fanatic, I have to pay my respects to Bitcoin, because if it was not Bitcoin and the trusted platform that Bitcoin invented, Ethereum would not be here. So if you are Satoshi Nakamoto, Dr. Craig Wright, thank you very much. And I would like to do a trade with you. If you could move 0.01 Bitcoins from block 1 to my one Bucky account, I'll give you 10 times the amount of the current exchange rate in ETHs.
Let's just say anyone would be mad to want to do that publicly. If you think about certain things in this world, why? Why would anyone want to come out? And at the end of the day, who wants to pay tax? You pay the exact amount that you have to by law, not tax evasion, tax minimization. I mean, anyone who pays more than they have to is crazy. And that makes me crazy, because these days I pay way too much and just try and simplify my life. But the reality of the scenario is it doesn't matter. What we need is people looking at the mathematics and the science and not the person. And I don't really care. I'm not going to be more than the person who gives the mathematics and the science. I'm not going to step up. We don't need a leader. We don't need a king. I'm not going to do anything more than what we're doing. nChain and affiliated companies will mine, not nChain itself, affiliated companies will be miners and are. And we're going to release what we're doing to help grow Bitcoin. And whether people like the fact that we're patenting it or not, I don't really care, because I'm going to patent, and we are. And we're going to allow those patents access to Bitcoin, which in my opinion is Bitcoin Cash, and help scale and help grow the network. And some of that will be given away free, as we're about to do and have started doing, and are in negotiations with people in different groups developing to do. And you want to offer me value. I mean, that's very nice of you, but I don't need it.
I can send you my account over the darknet.
So, don't need money from anyone, sorry. We're in the unique position, one of the few companies, in, I guess, on earth. I don't want vulture capitalists. I don't want investors. We don't care. Say what you want. We don't want your money. We got enough. That simple. In fact, one of our affiliated companies that will be coming shortly, and I'll leak it and whatever else, we're going to have investment companies. We're going to actually be vulture capitalists ourselves and give money to other people. Some fiat maybe, but also some crypto. And at the end of the day, if you don't want to take our money, too bad. That's your choice. I don't care. I'm not going to force you. If people want investment and there's a great idea and we see it as a great idea, great, we'll help. So, sorry, but I don't want your money.
Hey, Craig, anyone want to add to that? Lasanka?
Thanks for that, Craig. I'd just like to make a couple of points. Craig touched on tax. One of the, and I get asked this a lot, one of the biggest challenges in our business and with a lot of our clients who've been long cryptos for a very long time is that a lot of them are sitting on a lot of capital gains and all that sort of stuff. And just like to put a shout out to my friend James Livingston at the back there from ARC Business Partners, who solves our complex tax problems all day, every day, and many of our clients and competitors as well. Point one done. Point two, Craig, I'd be keen to hear, I actually read that you you've written a white paper on a 1 gigabyte block scaling solution. I'd love to hear how might that create problems with propagating blocks across the network? Might that create issues like centralization through miners having to kind of be in a low latency location? Will that increase the costs of running nodes? I haven't read the white paper yet. I look forward to reading it very, very soon, but I'd love to hear some of your thoughts around that, and I'm sure some of the people in the room would too.
It's very simple. Clients use SBP. Clients don't use nodes. Read the original code source. Miners are nodes, nodes are miners. That's it. If you're running a so-called node that isn't mining, you're a parasite. You're not doing anything for the network. That simple. If you're doing it for SBP, fine, but you are not helping propagation. You are not sending anything to any miner faster. Every single transaction that ever happens on the Bitcoin blockchain is transferred by large nodes that are involved with miners. That's it. All these other things, people sit there thinking they're helping altruistically. They're not. The distance of the network is approximately 1.32, plus or minus about 0.07. That means effectively you have just about one hop everywhere in the network. The Raspberry Pis, the edge nodes, whatever else, do nothing but slow down and actually minimize propagation. What we should have is people who actually have skin in the game, people who are investing to protect the network. It won't centralize because over time we're going to have more and more financial industries, more and more companies, more and more merchants needing to have access to propagate transactions quickly. What it should be is, and why there was originally IP to IP in the network before it got taken out because of DOS attacks that no one ever bothered to fix, which can be fixed very easily with IPv6, and I'll cover that in a second. If you are propagating, you want, as a user, your transaction to go to the merchant. The merchant cares about how quickly it gets on the network, not the user. The user can send from a SMS phone, from anything effectively, and the double spend attack bit is the merchant worrying, not the user. When you go into buy on a snack machine or in a shop or whatever else, it is the merchant who takes the risk. And that can be validated within 2 seconds. Right at the moment, 99.8% of transactions hit the majority of mining power within 2 seconds. So your transaction has to basically be compromised in under 2 seconds. And all the merchant needs to do is check 3 seconds later. Right at the moment, I went down and bought from a snack machine in Tokyo the other day, and it took 30 seconds for the card to validate. And that's a snack machine, which is terrible. It's horrible. Some of the PayPass things take longer than 3-4 seconds. Bitcoin can do that faster. If we have basically lots of big nodes, people can pay for this. Right at the moment, to be a small miner costs you $2 million plus. So the concept of having to have to run 1 million transactions a second, a $20,000 machine, is nothing. Next, banks. We have 50,000 banks globally. A little bit more at the moment, actually. We have central banks. We have about 200 central banks just for countries and governments. If we take only banks, we are more decentralized than we are now. If we add large merchants, the Amazons and everything like that in the world, we could expect 100,000 nodes that really propagate globally. That's decentralized. If you think that 200 countries, 50,000 banks, and 50,000 large merchants are going to get together to collude, you are absolutely insane. And I've got some tinfoil hats to sell you.
All right. If you guys want to add to that. It's a good segue because now we've gone into intermediate advanced questions. All right.
Just on the mining thing, I wouldn't mind asking Craig if he sort of sees the future of the consensus algorithm staying as proof of work, or is there potential for, say, Bitcoin Cash to upgrade to another mechanism and for those sort of high throughput to speed up the network? Is there ever likely to be a change away from proof of work, or is it the best mechanism as it was designed in the beginning?
Proof of work is the best mechanism. I've written a paper on this. Proof of stake consolidates into those with money hold their money. Now, think about this. If you are earning $40,000 Australian a year and you have a family, can you save a lot of money? If you're earning $400,000 a year, you can save a lot of money. Someone earning $400,000 a year can tax effectively put around half of their money away and save it and still live pretty well. On the other hand, someone with a family on $40,000 a year is lucky if they can save $1 a week. They're probably going backwards. That's the problem with proof of stake. If you have a lot of coin, it is very easy to sit some on the side and leave it there to vote. If you own, say, 30% of the network, as people do, you could sit 25% of those on the side to vote. And you will have far more vote than the other 70%. The problem with long tail effects when you take things like proof of stake is it consolidates power to the few. With proof of work, you don't consolidate power, contrary to what people think. It means every single day you have to chuck money back into the network. You have to reinvest. Your miners today will be obsolete in a year. Your power consumption today has to get better. Your management has to get better. You can't sit still. It's the old Red Queen scenario for anyone who's read Lewis Carroll. It's a country where just to stay still, you have to run faster and faster. Proof of stake allows you to be lazy and get richer. Proof of work means if you stop investing, you go backwards. That's the difference.
I might segue into another question which might be a bit relevant. This one is from Himal Chapagan, and it's how can blockchain and Bitcoin transform the economic growth of a developing country like Nepal? As I'm from Nepal and I'm working on a website to educate people about blockchain and Bitcoin. This goes back to what we were talking about, Craig, the West and developing countries and, the developed. That connection there.
Basically, I see that there is a need to always have free transactions and then low-cost transactions. If you have volume, it's the Coke model. If you have Coca-Cola works because they sell very cheap, effectively, sugar water and put lots of money into marketing it. They sell lots and lots of that sugar water and they make very small amounts of profit, but over billions of people. That's the same model. If you have very small transaction fees and you allow high volumes, you make money. More when you get things like smart contracts and complex things that we'll have in the West, that subsidizes normal payments that the rest of the world will have. That allows you to have markets in places like Africa or Asia open up, because as soon as you can start pegging currencies and pegging value, which we can do with Bitcoin, and tokenization is not spam. I don't care what some of the Blockstream people and Luke and whatever said. Tokenization is not spam. A paid transaction is not spam. Blockchain bloat is not a problem. Everyone doesn't need to validate every transaction in the world on their home computer. It never was designed that way. These people are fools. If you think that you need to go through and personally check it and validate everything, you're crazy. The system works. You don't need to trust every transaction being checked personally because it is a mathematical system where it all validates. You can check the hashes randomly on any block as you wish. That's enough. That then opens things up so that you can have low-cost transactions, not the $40 transactions US dollar that we're seeing on Bitcoin Legacy at the moment, but the ones where you're talking about half a cent for sending $100. That sort of small fraction will enable people to send payments anywhere, close to free. That means people in the Philippines who are working, who are traveling, and want to send remittances back can. It means people can start saving money and putting it away. Bitcoin is ideal for the third world. Once we start actually pegging other things, whether it's gold shares, whether it's currency in US dollars, anything else, and there are some plans for pegged currencies as well. Once that occurs, not something like Tether, but provable asset reserves, etc., then it doesn't matter anymore. You can just send instantly. You can transmit between currencies instantly. When that starts happening, then we have a scenario, a situation where the poor can actually really start to negotiate and engage and be part of a global world. They can start opening up access over simple low-speed internet connections and do simple tasks and earn money. Then we have a scenario which is coming in the next couple of years where the entire world changes and we start opening up billions of people who can start engaging. They're not suffering because capitalism is stealing from them. They're suffering because no one is dealing with them. Africa is not poor because we're sucking the resources out. Africa is poor because we don't trade. Nepal is not poor because we suck out their value. It's poor because we don't trade. Once we open it up so that people can trade freely without government restrictions and controls, then something remarkable happens in this globe.
Not sure how I can follow that, but financial inclusion is one of the things that we focus on. And in terms of peer-to-peer, C2C type payments globally, there's $500 billion a year. In terms of P2P, business to business, that's $25 trillion a year. 95% of those transactions are controlled by banks. Western Union, like less than 1%. So it's all the banks, and they are, as we know, very costly, very inefficient. Something like Bitcoin, which, as we've been talking about, been addressing this for a number of years now, but blockchain more widely, has the potential of removing all of that. 10 to 20% of $25 trillion is a lot of money. Even at the 500 billion C2C, which is a lot of which is remittance, think of that 20%, 500 billion going to the people who need it and not into the pockets of the banks and the Western Unions. That's what this technology is about. Craig said it there. It's stuck with me for years and years. Bitcoin is not, for us, it's not for the first world. Bitcoin is mainly for the third world and the developing nations. This is technology that will bring them, it will empower them, and it will enable them to improve their lives. And those are the families, because they can transact, they can pay, they can build businesses, they can compete on a level playing field. And I think that's the most exciting thing about this technology from my perspective.
So an example, I've done a transfer here in Britain of British pounds to US dollars of 10 million pounds. It happened in a fraction of a second and cost me 10 pounds. The rich don't need Bitcoin. The poor do. Bitcoin is not for people with a shitload of money, any way to put it. I already can transfer millions instantly. I can buy gold instantly. The poor cannot even send their money slowly right now. Hawala networks, each hop costs money. remittance networks. Everything costs money. It can be $40 from someone without a bank account in the Philippines to send back remittances back to their family when they earn $100 a month. That is disgusting. Bitcoin will make that a fraction of a cent. It will make it instantaneous. It will make it just flow. That's what it's about. That is the real aspect of this. Not people in large corporations making more. Billions of people globally trading, interacting, and saving without having fear of losing their money, without corruption. When I went through places like Ghana, if you had money, people took it. If they didn't know you had money, you survived. If you hid money under your mattress, people took it. Bitcoin allows you to have your own sovereignty because you can transfer instantly and live and get away with things. And if you need to leave a country, as happens all the time in places like Africa, you can without losing what you have. It is critical. We have 7 billion, and by 2050, 9 billion people on this earth. And right now, today, 4.5 billion of those are being milked by the system. Those 4.5 billion people are, for the first time in human history, going to have access to their own financial freedom and sovereignty. Why do we need fees? Because we have a world that needs low fees, that needs people to be able to transact and needs financial security. That's Bitcoin.
We got 5 minutes until audience Q&A, so we'll get there, guys.
And just on that point, obviously remittances and financial inclusion are the obvious thing people think of, but when it comes to blockchain, I don't think you can think big enough what the possibilities are for especially the developing world. Because you can do away with institutions and bureaucracies, things like land registries and anything that's controlled by the government, which in a lot of these places and countries is often very tied with corruption. So for people living in those countries where it is hard to deal and there is a lot of corruption and basically the systems aren't fair, blockchain can really democratize a lot of processes beyond money. And I think that will change and level the playing field in a multitude of ways. So.
Well, take for instance, we have a multi-trillion-dollar insurance industry that doesn't work terribly well, I have to say. Instead of insurance, what happens if we start tokenizing ownership? Imagine instead of owning your house through debt, you break up everything into a smart contract. You split it up into 1,000 shares. I won't call it an ICO, but initial coin offering. But imagine that you sell and raise money for that, and you have enough to buy your 10%, and you put a promise out there that is actually enforceable. I will mow the lawn. I will maintain the house. I will do everything else. And you invite people to invest in your home, and you pay off the shares in your home as you have money, and you get more. But at the same time, rather than just buying your own home, how about you buy shares in other people's homes? If you have enough to buy 1,000 shares in your home, why not buy 100 shares in your home and 100 shares in another one in a different city and 100 shares in another one in a different city and diversify? So you can still own property. And if your home has an accident, you don't lose everything. Then you can put smart contracts against insurance if certain events happen. You can automate everything. Imagine if you have the share market fall and the housing market fall. You have 100 shares in your house. After the crash, you have 100 shares in your house. Except now, any cash that you may have aside, instead of being forced out of your home because it's now negative equity, you can buy more shares. So when the house price goes up again, you actually own more of your home. It's the exact opposite of what the problem has been with debt. We have a scenario where every time financial crashes happen, people who own only part of their home end up with more. We have a different financial system about to happen. And for the first time, it's going to be inclusive and global.
All right, guys, we are now at Q&A stage for the next 10 minutes. Okay, I'm sure we'll have. All right, up here at the front. What's your name? Sorry.
Yeah, my name is Sergey. I mean, I'm not sure who Craig is, but he sounds like a good chap. All good except he's thinking. In terms of, I'll start from the back, right? In terms of property and tokenizing property, we actually have an alpha that does it already, and we're not waiting for the downturns. We're actually selling it, because if we spread it for 1,000 people, for example, different people have different situations, and some people actually sell it at a discount. So as you start purchasing the tokens back, some people sell it at a discount, some people sell it at par, some people sell it at premium. So we're actually doing a test as we speak. That's pretty cool. In terms of Bitcoin Cash, forget Bitcoin Cash, all right? Because there are other methods to transfer money cheaply. Because Bitcoin is great as a store of wealth, not as a transactional instrument. I know there are a couple of thoughts on this, but I can assure you Bitcoin is not going anywhere, right? In terms of Philippines and sending remittances, you talk about sending remittances. We actually go to Philippines and making sure that people don't have to travel to work in some God forbidden country to send remittances. We actually try to make sure that Filipino people stay in the Philippines. In fact, a month ago, I was talking to the deputy government about this, and I'm actually going there shortly. But yeah, as a general thing, thank you very much for your input to the industry. And I would love to get in touch with you to discuss this further. And like I said,
was there a question there? Oh, it's a comment. Okay, thank you.
Yeah. So I'll just make a comment there. If you want to forget Bitcoin Cash and stick with 3 transactions a second, your choice. I'm not going to stop you. Next year, Bitcoin Cash will be able to handle 50,000 transactions a second. And in the next 6 months, there are already things in play. I'm not going to tell you what they are, but if you think, the war's already lost. That's all I have to say.
You should tell it to the farm that happened on Sunday. With the drop of $1,000 over 30 minutes. That's pretty funny how it happened.
Actually, it didn't drop $1,000. It was 3 trades that hit high value. It went in that time from 600 to 2,600 in a day, with 3 trades hitting 2,600. It has stabilized at about 1,250. So basically, what you're saying is it dropped, but it doubled. So, oh no, it doubled in value, and 3 people lost.
It depends on what you're looking for. It depends on the thing. At the end of the day, Bitcoin is like gold, right?
No, actually, Bitcoin's not like gold. Bitcoin's a very, very poor gold.
Let's discuss this further.
No. There's a reason. To actually be gold, Bitcoin will have to have 540 megabyte blocks just to do the London trades. The London trades on gold equal block size, number of transactions, 540 meg blocks. That's how much gold is traded. Not payments, gold. And that's just on the London exchange, not Chicago, not anything else. So basically what you're saying is Bitcoin is really crappy gold that you can't exchange unless you have, say, Fort Knox. And if you're doing inter-country exchanges eventually, Bitcoin's great because you know how much you've got in Fort Knox. Wonderful. Except here's the thing. Store of value follows. It always has. Store of value happens because something is a payment source. Bitcoin was a commodity. The information value, the ability to store timestamps, has value. By storing things on the blockchain, you sell value. Bitcoin has killed that. It has made it spam. It is now pure speculation. It cannot scale with the political environment there, and without scale, it ends.
Sorry, guy in the gray t-shirt.
Hey Craig, my name is Prashant Thakur. You spoke about remittances and how Bitcoin's good. Completely believe that, completely agree. But think about it, I'm a guy, poor guy, going from India, southern state, Kerala, to Dubai as a laborer, earning maybe $300, maybe $200 a month, in a poor country. Now I want to send $100 back to India to my family. I've got two options. If I go to a bank, it's going to be crazily expensive. It's going to kill me. It's useless. So usually the main mode of transport is Western Union. With Western Union, I'm sure that today, when I send my $100, I'm going to pay $5 in fees and $95 is going to reach there. If I do a Hawala, maybe 95, 96, 97, something will reach there for sure. The big problem with Bitcoin or the cryptocurrency today is the volatility, the fluctuation in the price. There is no guarantee that my $100 will reach $100. At least with Western Union, it's 95 that's getting there. With Bitcoin, Bitcoin Cash, whatever you want to name it, it could be 70, it could be 50, it could be nothing. How do you solve that problem? The one way that problem can be solved.
That's a very, very easy problem. That is a problem that has been solved 200 years ago. Right now, companies have been using derivatives and what are called risk-free derivatives, where you have a combination of long shorts, swaptions, butterfly swaps, bull swaps, etc., to manage currency exchanges. The entire development of forwards was used so that farmers can manage their valuations. It happens now. If you want to exchange as a company, valuations between pounds and yen and dollars, you can do it right now. As we start opening up derivatives, I know this bad word that many people in Blockstream and whatever else try and scare people with. Derivatives allow speculation, but all is happening in most of Bitcoin at the moment is speculation. So don't tell me about bad speculators, as all they're doing is driving.
That's all fine, it sounds good, but the reality is the poor family in India, they're going to need a fiat currency end of the day that it happens to be Indian rupees. They will have to convert it in the end. Till the market, till everybody, even the small retailers and grocery shops starts accepting Bitcoins in one form or the other, you will always...
And you're not listening. You could do an exchange instantly. There's no loss. If you transfer the value pegged against Bitcoin, you have derivative instruments, you can do it in seconds. There's not going to be a massive change in the value of Bitcoin in nanoseconds. Contrary to what people might say, you can capture that volatility. And others who sell against volatility and make money out of options and whatever else and capture the gain, get that gain. That's what derivatives do. You can sell so that your Filipino pesos are instantly transferred into rupees pegged against the blockchain. That's some of what we're going to be releasing technology for and working on in the next year. By doing that, you have Bitcoin Cash as the underlying mechanism, and you still allow people to do whatever they want in whatever currency.
But that's in future, right?
That's very close, yes.
That's one?
Yeah, very good question. Sorry, we got some in the back, and then we'll make our way to the front. Yeah, guy in the blue?
My name is Ting. So I just want to ask, like, the underlying technology that enables success is cryptography. So if this quantum computing comes into play, would that affect all these blockchain and everything else?
Quantum computing, great.
No, quantum computing is a big boondoggle project. There is no computer ever created that has a single logical qubit. Full stop. IBM announced how they've tacked together a whole lot of different qubits, and the error ratio is too high and they fail. Now, even if they do get a logical qubit. Who cares? Number one, Grosvenor's algorithm allows you to let's see, we can speed it up millions of times using a quantum computer. You can do a hash attack millions of times faster. Basically, an attack against the Bitcoin address and SHA-256 will be reduced from the massive amount of time it is now to approximately 20 to 30 trillion years. So you have reduced from 100 sort of billion trillion years down to only 20 trillion years. Yay. I'm not going to wait around and care. Next, if you've already spent an address, and this is part of why you don't want to have address reuse, then you could attack public keys. And ECDSA in the current format would be attackable with a quantum computer in the order of maybe 10,000 or so qubits, maybe more. Now, 10,000 qubits with current technology would be around 10,000 acres worth of size. That would cost probably $2 billion a year to run. And the wonderful thing here is it would speed up attacking ECDSA so much that you could probably break 3 keys a year. So for a few $billion, you could attack 3 Bitcoin addresses. If you were that worried and you had an address that had been reused multiple times, because remember, this is only reused addresses where you can see the public key that can be attacked with Shor's algorithm, not Grosvenor's. That means if you had a, say, 4 or 5 multi-sig, you're still secure. They have to attack all of your transactions within that year, so they can only get 3. If you moved your addresses with that every year, you're still safe. If you set up a 15 of 15 multi-sig because you've got $1 billion invested in 1 key rather than many, it would allow them to break your addresses in only 5 years for one of them. Another way of doing this, of course, would be if you spread your investment of $1 million over even 10,000 keys. At maximum, they could spend billions of dollars to maybe steal $10 of your money equivalent. So do I care about quantum computers? If they ever finally solve the problems that have not even been addressed, which is to do with the statistical distribution, that there has been zero solution publicly announced of, then wonderful, great. And if you want to spend billions of dollars to steal $10 from me, go for it.
All right. Yeah. Also, just quickly, we are at 8 o'clock, so if anybody does need to leave, of course, you're more than welcome to. But are you guys happy to go over time?
Yes.
All right. Okay, just before we go to the next question, Mike.
I know a lot of you guys came to hear a little bit about ICOs, and I actually want to throw the mic to Toby over here, who I respect. He's he's a very good trader, and he's very sharp in terms of trading. I really want to hear a few of his thoughts in terms of what he looks for and ICOs, and maybe some tips on how to trade it, and maybe some newer guys as well.
Yeah, look, obviously ICOs is a very hot topic at the moment. It's been a very interesting year, and I've had a lot of experience in that this year. Mostly good, some bad, some shocking, and I don't know, it's probably better to address people's questions as they come up, but the big thing I'd sort of have to say about ICOs and a lot of these tokens that have been issued, particularly RC20 tokens, is that I think we almost need to develop and work on a new framework for thinking about these things in a sort of capital markets perspective, that we've now got a third asset class. We have debt, equity, and now we have tokens. And tokens, I think at the moment, almost trade like they are equity, even though they're not. They're more of a utility value. So, and you can argue for that very positively when it comes to the platform level, things like Ethereum. Others, it becomes difficult, and I find I speak to a lot of people who want to do an ICO, and the biggest question I have is, why do you need a token? And I find a lot of people actually struggle to answer that question. Like, blockchain is a great solution for so many things in the world, but having a token for everything, I don't think is the answer. So I'm happy to address questions specifically on specific ICOs and talk about some of my wins and losses in the space, but that's my overall comment I have on the space, is that I think it is emerging. So,
Yep, question over there.
What exchange do you trade on for coins?
Well, with ICOs, you often get what you're given. So if you've made a bit of an error, you'll wind up on Ether Delta. If you've done well, you might get on Bittrex and all these sorts of things. But it really depends on the issuers of the tokens and the deals that they've struck to have that liquidity provided. And I've seen some good ICOs, and they've been well run, and they've got that liquidity provider lined up quickly. And I've seen some that I thought were going to be well run that have been badly executed. And so I'll use any exchange I can. So
does that mean you're across all those exchanges?
Yeah, I've got so many accounts. It's not funny because you have to. Yeah. I always bring it back, and I prefer to use a couple of core ones. But yeah, a lot of if you want to liquidate a profitable or even unprofitable trade, you're going to have to turn it back into usually Ether and then bring it somewhere safer.
Are you also trying to arbitrage across the spreads on the different exchanges as well?
Look, I've done a little bit of arbitrage. It's not my focus. I'm a trader primarily in the derivatives and futures space, and I'm treating my investments in this space a little bit differently. I'm actually trying to buy things that I like and hang on to them. I'm in it for a few flips as well along the way based on hype.
Yeah. Got another question? Yep.
I have a question for Satoshi. Hi, just wondering if you support Bitcoin Cash, why didn't you start the Bitcoin with large blocks? Why you start the block with 1 megabytes? Did you foresee the fight?
Bitcoin was started with large blocks, by the way. There was a 32 meg transaction limit within Bitcoin, which effectively capped the size of the blocks because of how that was coded, which was basically there was a little bit of shit coding in there that needed to be fixed, and other people like Gavin fixed. Now, the limit came about back in the early days because of people flooding the network. This was flooding the network when there were probably 100 home machines, and there was a need to try and control things. The original version of how that got controlled was flood control. If you read the early code, you'll notice that the idea was to have free transactions, and then above that, you start charging people. Now, that worked fine, except for one little problem. When there's no value in Bitcoin, how do you charge someone? Now, this was before Pizza Day. And you couldn't even say that 50,000 Bitcoin got you 2 pizzas. It didn't even have that value yet. So cart before the horse, how do you get value to be able to have flood control? How do you make it so that if you want to attack the network, it costs you a lot of money? Well, back then you couldn't. So the idea was a temporary limit was put in. Some people like Hal wanted it sort of further and didn't like sort of where it was going. Ray was somewhere in the middle. There's Ray Dillinger. But the end result was we ended up with a temporary cap that no one removes, unfortunately. Back in the old days, people, this whole hard fork bit, Bitcoin hard forked just about on a daily basis in the early days. The code was updated all the time, sometimes without telling anyone. People would wake up and go, oh, bugger, a certain person has pushed a new release and updated it on us, and they had to run around and scramble. There were some things that were needed. There were a few major bugs that needed fixing. And all of that happened, and the world didn't end. And we've just seen the EDA, DAA update in Bitcoin Cash, and the world hasn't ended. no one noticed anything. It was a hard fork. People upgraded, it happened, and guess what? It all just kept running. The world didn't end. Wow. I mean, you forget all the scary stuff you've been told. It just happened, and we've just proven that it does. We've proven that 1 gig blocks are fine. We've proven that it scales fine. We've proven that you can upgrade the system. So what more is there, really? So why large blocks? Why not large blocks? Well, there were. That's the problem. The thing was, back then, you were looking at 10, 20 times the amount of space, and no one was getting close to 1 meg. Unfortunately, no one decided to upgrade it. It kept being, Adam back in 15 said, oh, we can safely upgrade to 2 meg, then 4, then 8. And 2 years later, it's, oh, we need another 2 to 4 years testing. Well, guess what? We've done the testing. We've done 1 gig. And privately, which we're starting to release, we've done 380 gig. So it works.
Blue hat. If anybody wants investment tips or questions, I think that would be a good spread.
G'day. Thank you for everything you've done, Craig. Just a question. 3 weeks ago, I made my very first transaction with Bitcoin Cash, and it cost 30 cents. It was really fast, and it felt a bit nostalgic, really, like back in the days. Now, I've talked to a lot of people, and we're quite confused between the crypto wars between the two parties, Bitcoin and Bitcoin Cash. And one of my questions was that the transactions are fast now, but what happens as more users, for example, adopt? Won't we run into the same problems as Bitcoin? Now, I know this evening you've talked about, you've got things coming up, for example, but how will the public know about this in order to answer the same questions? That, for example, if I wasn't here this evening to hear you say this.
Bitcoin is meant to be plumbing. It's meant to be boring and no one should care. The public won't care. All they'll notice is it works. Bitcoin Cash isn't going to be jumping up and down to go, look, we're wonderful developers. Well, some people might, but most of us won't. The idea is we're going to have it as plumbing. It'll be big, thick pipes that no one cares about. The only reason people care about plumbing is when it's broken. And we're going to ensure that it's not broken. So you're talking about these problems. The problems are artificial in Bitcoin Legacy. The only reason that there's a scaling issue in Bitcoin Legacy is people have put it there. You remove it, it's fixed. The end. We can scale more than the entire world's global commerce and Internet of Things today. And that only gets faster with Moore's Law. It only gets easier with storage. It only gets easier with networks. We've got 5G coming out soon. We have fiber being rolled out more and more of the world. I mean, the reality is access becomes cheaper, it becomes faster. And all I have to say about having seen you pay, well, you just said you paid 30 cents for a transaction. I'm sorry. I'll say I'm sorry because some of the defaults are still too high. And if you'd put it at 0.5 cents, you probably would have got it through still too. So I'm sorry you paid 30 cents.
All right, we've got time for like 2 to 3 more questions. We've got one here.
This is for Tobbias. Hi, my name's Aaron. I just wanted to know, hopefully I'm not the only one here. I really have no idea for around how heavy a normal user goes about buying into ICOs and things like that. So recently I tried and I ran out of gas during the transaction, so it rolled back and things like that. And Bob's laughing at me about that. But I really have no idea. So I'm just wondering if you could, I guess, just run through from start to finish in simple terms how an end user goes about buying into an ICO. And
it depends a bit on the ICO. If you want to have more.
It does depend on the ICO and the process that they're using to conduct that raising. But on one where you're trying to up the gas, it's probably not that well designed because there's a bit of a rush at the door. And in those instances, yeah, you're going to have to do things like
up the gas and in a sense be lucky to get through the door. What I sort of try and do and how I try and sort of extract value out of the space is to target my investments at an earlier stage if possible. So to try and get in and contact the founders and really discuss it with them if I want a firm allocation. So, but in the regular ICOs where you're forced to compete with the public, there's not much you can do about it. You've got to fight to get through that door.
So the gas goes up as it gets closer to being fully consumed.
Yeah, it's a competition. Whoever pays the most has got the most chance of getting in. And some of them are sort of such short things like they work that people will pay stupid fees just to get massive allocations so they can just flip it for a profit. I think the ICO space has matured a lot and changed. So I can't remember that last time that was actually an issue because people are smarter at how they are running these processes. So they don't want to exclude people and they're doing whitelists, which is a much better process. So they're actually capping everyone's allocation because they say, all right, we've got 1,000 people that want this, we're going to give them a max of 2,000 each, and then that represents our hard cap. And after that, we'll let there be a free-for-all, which is a much fairer process. But it is quite nuanced, and it does depend on the actual ICO.
Which one did you miss out on?
It was the gold one where it was pegging a crypto coin to gold. I think it was something gold.
I've got a question in the back over there, and then here. I wish we could have gotten through everybody's questions.
Good evening. Hello, everyone. My name is Daniel. I just have a question about how you are trying to, with the next generation of crypto, such as Tangle technology, where you have free transactions and the bigger it gets, the faster it gets. How are you trying to compete with that?
This is people who don't bother to actually understand what Bitcoin is. As I keep saying, Bitcoin is not a mesh. It has never been a mesh. It is a small world near complete graph. If you understand the mathematics that Newman and Stroggs and others basically developed 20 years ago now, then you would understand how fast it can be. It is actually far more efficient than random graphs by a factor of about 50%. And this idea of making tangles and increasing meshes and whatever else that most computer science people are hung up on because we stopped teaching good, decent mathematics and computer science 20 years ago. So now we're stuck with this idea that we have this technology that we already understand and we're not learning anything new. And that's the problem. It's about time people learnt that they can learn new mathematics and new ways of doing these things without trying to rehash the old code, rehash how things used to be. Bitcoin isn't designed that way. It isn't going to break that way because it was never designed that way. People keep trying to think of it as a mesh. It will never be a mesh. And if they keep making it a mesh and making their solutions that they try and fit a mesh, they will keep getting half-assed answers. And that's why we end up with these other things.
One more. I don't know if that answered that for you.
Yeah.
No? No, it didn't answer for him, Craig.
On that point, you're obviously referring to IO2 and
IO is the start of it.
Yeah.
You're going to get a whole new generation of cryptocurrency, right, or crypto platforms, and if it can grow with population to make it faster, and it can be free, why would we use Bitcoin Cash? Why would we use this? Why would nations like India, or where they can make instantaneous transactions for free, pay the 0.5 cents?
Yeah, look,
IOTA is not free. IOTA is not instant. IOTA is not that easy. IOTA has multiple hops. The larger it scales, the more easily it can be sibbled and compromised. I know what they say, but the reality is, and it's mathematically proven, red balloons and Bitcoin back in 2012 by a number of Microsoft researchers showed, they didn't actually investigate the network, but they showed for a network distance of greater than 3, there's no way to stop Sybil's. Full stop. And it's mathematically demonstrated. The amount of sibling can be controlled, but that's a different issue. Bitcoin isn't a distance of 3. It's a distance of 1.32. It is far below the limit. Okay. That means Bitcoin, I mean, IOTA's talking about scaling at a level that I don't care. We tested that years ago. I mean, I can actually foresee actually having multiple payment channels linked and whatever else, so that within 20 years' time, we're looking at 1 billion per second transactions scaled by Moore's law, which will be 10,000 times, giving you 10 trillion transactions a second. That's where Bitcoin will go. And people may not like the fact that block size will increase and it'll be companies and things like this. I don't really care. Companies run things because companies are efficient.
Yeah, you say where it's going to go, and then you say, well, this is where this is at now. And you don't know.
I'm saying there's an artificial limit which will end up being removed. The block size will end up jumping. And right now, Bitcoin today could handle 1 billion transactions a second.
Yeah, but
that's more than IOTA. That's more than IOTA in its wildest wet dreams.
Greg, one second. Tobbias, did you want to say something? And then one more question after. We're going to have one more question for
the problem with IOTA was they also invented their own hash algorithm, which was broken, which
didn't help. Yeah.
I think that really slowed their development. And although the direct acyclic graph technology to create a decentralized ledger isn't proven, whereas Bitcoin is far ahead of it, but I don't think the technology's there. So it's interesting, and I've followed the story very closely. So
thanks a lot. I know most of the panel, and Craig, I interviewed you and had you at a panel in Melbourne in 2013. So I'm an old dog in the room like you. Thanks for your time today. I just wanted to review your critical view on the satellite technology that is using to distribute some of the blockstream transactions, and we're trying to work in the Philippines. And I'm very interested on what might be revealed on how we can settle a transaction in a remote island without some of the constraints that you propose to be critiquing. And so I'm very interested in building this plumbing that is boring and provides this facility for fractions of a cent transactions onto a SIM card.
Now, the problem with the Blockstream satellites is they're trying to change the infrastructure. Satellite's fine as an internet transmission. Satellite's fine as a way of connecting merchants. At the end of the day, though, satellite's also extremely easy to block. Like it or not, Raytheon has been blocked by the entirety of China. The Raytheon equipment is well known, and they take money from China to have their anti-blocking, how many times with EM technology blocked. China is blocked for all Raytheon satellites, which are the ones Blockstream want to use. Radio interception and blocking, I can buy for £58 a satellite blocker that will do a small neighborhood here in Britain. It's illegal for me to plug it in, but I can buy it. Of course, no one would ever break the law, so we're totally safe. But the reality of the scenario is, if you're relying just on satellites, then it's easy to censor. The reality is, we need to make it robust. If we can send transmissions, 2 SMS is enough for a Bitcoin transaction, a simple one. On top of that, 280 is enough now for Twitter. So you could send Twitter as plumbing for Bitcoin. I'm not sure if Twitter would be happy about it, but you can. On top of that, think of how many other ways there are to have point-to-point broadcast. What we shouldn't be doing is sitting there, we've got the solution by putting out satellite. What we should be allowing is innovation. It's internet, it's connectivity. Who cares? Let all the network guys solve that. Don't come out with, this is how we're going to fix Bitcoin. Just have the network work. Fix IP to IP. And I mentioned earlier, for instance, IP to IP. Now, in the early days, it was easy to DOS. With IPv4, DOSing IP to IP connections was simple. There's RFC 7707, which is a very important one. This is about pen testing and scanning of IPv6 networks. It was estimated that in a standard /64, scanning and finding IP addresses to attack them and even pen test them could take in the order of 20 billion years. There was a SANS presentation the other days from some old friends of mine who were talking about this. Now, just scanning on current technology would take something like 20 billion years to find the IP addresses. Now, if we start moving across to IPv6 and we start having IP to IP transactions on IPv6, we had no DOS issue anymore. If you can't find the IP of the person you want to try and attack and knock off the network, well, you can't do it. I mean, the idea that you might spend 1 billion years trying to find someone's IP so you can attack it, and they're randomized now. IPv6 randomizes addressing. More, and I've talked about this one in the past, there's a technology called CGA++, which is cryptographically assigned addressing, which two parties can actually then work out the endpoint addresses, and they can change over time without either party distributing anything to the world. So to attack and DOS a network, you have to actually know what people are doing. So you have to be on the network that the person's coming from to be able to DOS them. This technology is there now, and as we start deploying it, it's going to radically change how DDoS attacks work over the internet. As we start doing this, it opens up the ability to re-add things like IP to IP transactions that were there in the beginning in Bitcoin, but got taken out because they were so easy to DOS. Now they're not. If it takes you 1 billion years plus to find an address, it's not easy to DOS it.
Okay, yeah, sorry guys, we're gonna have to wrap up. Yeah, just one thing for everybody. What's one thing you've learned over like the however many years you've been in the space? We'll start with Lasanka, each of you.
You know, I actually wanted to learn more about ICOs today than anything else, and I think there's a lot of hype about it, and you know, a lot of people rushing into it. But what's more important is to remember the fundamentals of investing, right? Yes, you can potentially invest into the next Ethereum ICO, but remember what makes an investment and what gives you returns is having a great vision and a great cause, a solid team of founders, a great team, great technology, you know, and most importantly, a team that's visible, a team that puts their reputations and relationships and credibility on the line every day to run a business, and that is what makes a good investment. Yes, there is a lot of hype about ICOs. Yes, it's really easy to invest into an investment on the other side of the world without a 25K minimum investment or a Section 708 certificate, anything like that. But ICOs have really opened up the world to, you know, any type of investor to invest into any investment anywhere in the world. But remember what's going to give you returns, and also, you know, really diversify, right? You know, take a portfolio view on everything. And also mind your tax, talk to Jones.
My key thing that I think I've learned in this space is just to not underestimate how quickly it evolves and changes, and just the surprising nature of this whole business and ecosystem. And I think that all boils down to that this technology is changing at an exponential rate, and it's not something that changes at this speed and magnitude. I don't think we're naturally equipped. We think in a linear way, and I just believe this technology, one way or another, is going to reshape the future, and it's changing faster than we've ever imagined. And that's just the key thing I've learned to grasp is just
don't underestimate how fast and how powerful these changes are. Awesome. Yeah.
I first looked in the Reddit Bitcoin forum in 2015. They were arguing. And today I learned they're still arguing.
It's already been said, this isn't technology for all of us, this is technology for the developing world primarily. It's 4.5 billion that Craig talked about. Think about the Sustainable Development Goals that the UN have laid out. We don't have very much longer to achieve them. This is enabling technology that is going to raise 4.5 billion people above where they could otherwise be raised to. So that's for me the key thing about this technology.
Yeah. Yes. Great, keep it short. Great, one thing you've learned. Keep it short.
Sorry, what was that?
One thing you've learned in this space over the years.
To ignore trolls. I mean, at the end of the day, you say about arguing and whatever else, and I might say things on Twitter and a couple other places, and I don't really care. We're just going to do it anyway. You can tell us what won't work, and I put it down to a bumblebee theory. You can sit there and tell me why it doesn't work, and we test it. We see it works. We're going to do it. I don't need your money. I don't need your cash. We don't need your funding. We don't need your permission. We're going to do it. If you don't like what we're doing, stiff bickies, don't use it.
All right, can we please give a round of applause for our panelists? Thank you all. Thank you, Chris. And thank you all for coming as well. Thank you to our volunteers. Please put your hands up from IRESS, helped out tonight. Yes, thank you guys as well. It was not easy putting this together, but we got there in the end. As well to Michael Trin, who also helped with putting the idea together at the very early stages, and all the other communities that also helped to bring everybody here. Thank you all so much. Feel free to take pictures, selfies, whatever you want. Craig, you okay to stay on for another couple minutes? If you, yeah?
I am, yes.
All right,
fine.
Cool. If anybody wants a selfie as well, I was going to go for it. So I'm happy with it. Thank you, everybody.
Thank you, Wright.
Thank you. There we go. Try moving it to the big screen. I've got a big computer screen too. There you go.
I'm pleased to meet you, Craig.
Good to meet you too.
Thanks so much for volunteering to come and speak at our event. Really appreciate it, Craig.
Lots more to come. That's all I'll say.
Thanks, Craig. Thank you. Good night.
Thank you.
Thank you.
Hey Craig, can you hear us?
I can.
Okay. We're going to ask you some questions.
Yeah, go for it.
Okay, so my first question is, you don't strike me as a capitalist.
I am. All right. If you read Adam Smith, you will also read that the two other things he wrote were a treatise on moral sentiments.
Absolutely. The question I've got is the perception of Bitcoin and blockchain at the moment in the community is that it's full of a lot of investors, trying to make money overnight. It's going to go to the moon, going to get a Lambo, etc. What ideas or concepts have you sort of come up with that maybe would change that perception? Is it the plumbing or the sort of mechanisms that could help charities, I guess, or what?
You got it wrong. I'm not a fan of charities. I'm a fan of helping people actually do, not giving money away. I'm a fan of empowering people so that they can work and earn themselves, so that they can learn how to fish and catch a fish, not be given a fish. So modern charities aren't something I'm a fan of. I don't like giving money to a group of rich white guys who get to decide that 1 cent in the dollar goes to the people they say they're helping.
Yeah, I'm not rich, bro. I'm wearing this sock because I've got to pay rent. Yeah. So then the second question we had was around about can the real Satoshi please stand up?
Well, no comment.
Love it, love it.
I've got a question, Craig. Are you a fan of the slow bleed or the kill shot?
Probably the slow bleed.
Were you a kill shot originally, though?
Yes, you were.
I think you were a kill shot originally.
Could have been.
Yeah.
Craig, I got one more question for you. Was what happened this weekend, was that just testing the waters, seeing how everything would react?
What happened this weekend?
Because obviously there's a lot of the usual trolls and shills that are like, oh, it's a piece of shit, it's crashing, yeah. but really what I saw was a new support level that we haven't been at before. And given some of your announcements, which you haven't really made public yet, you can start to see that really we're just beginning. And yeah, there's a certain someone that's got me in on early. I got in at the $400 mark, and I'm quite deep.
Good.
I'm very, very happy. And
well, I'm not interested in helping speculators. Speculators are needed. They are a valid part of everything that happens in society. I have no issue with speculators. I'm not going to help them, though. The people who need help aren't speculators. The people who need help are people who need to make payments.
Absolutely.
We're going to make Bitcoin a payment engine, an engine for using for time-stamping documents, for smart contracts, for all the things it was originally envisioned to be. And my answer to that is the value will come from use. Not speculation, not Ponzi's, use. And I'm going to build slowly, safely, over time, and we're going to make sure that we get the majority of the world's population using something they can safely. And if people make money out of that, great.
Well, you can also see, with like we do a lot of stuff around the second world and third world Asian countries, and you can already see that as a massive part of it, because 80 or 90% of them don't actually have passports, so they're unidentifiable and they can't open bank accounts. And
exactly,
yeah, the quality of the mempool for Bitcoin is just, it's not transactable at all. And it's not viable to be able to spend $8 to be able to send $1. It's just ridiculous. So love your work, and it's been a pleasure talking to you.
And the idea at the moment is they're talking about scaling. Well, it's not going to happen the way they think. If you want to move from the not even million people who use Bitcoin for any use, let alone speculation, to 5 billion plus people a day, you've got to start thinking differently. And this idea that you can have big meshes of billions of people doesn't work. It doesn't scale that way. Mesh scales factorially. Lightning scales factorially. And even saying how they can test it to 1 million users and it's only 10 hops and things like this. So what? If you change that to 1 billion users, it falls apart.
Explain a Sybil attack to Mitch. He didn't know what a Sybil attack meant.
A Sybil would be a node that acts to censor or change transactions, to alter them, something that sits between transactions. A man in the middle, in effect, yes.
So you can't have it with just one hop. With three, you have an opportunity for a man in the middle, right?
Yeah.
Yes.
Yeah, very interesting.
So the larger the network grows, the more opportunity there is for something to get in the middle and actually start congesting, changing, altering, allowing double spend attacks, etc. If you've only, I mean, with a network distance of 1.32 like Bitcoin has, it can't really do a double spend, because by the time you've sent out your connection, and most network nodes have it, you get rejected. So you send a transaction, you check 2 seconds later, you know that there's no double spend, because if they try, they get rejected. That simple.
Yeah. But RBF lets you do that, right? Like, that's the problem with RBF.
Yeah, replaced by fees. I'll come back and resend a transaction in a few minutes. I mean, there's a problem with that. If you want to negotiate with a merchant to be able to resend a transaction, set up a payment channel. Then it can be done securely. But this idea of changing the transaction is just wrong.
Can we still do payment channels without an RBF type method?
Yeah, of course. Payment channels existed in the early days, and if you allow op return without knobbling it, which is why Ethereum left, and you allow complex script operations, you can have them extremely safe and secure.
Very cool. Thank you so much for your time, Craig.
I got one more question.
Thank you. Yeah.
One more question. In your Bitcoin doc, you mentioned the fact that if someone drops some rubbish on the street, they'll be able to get a micropayment debited from their accounts. If they drop it in the bin, they could get a payment.
Yeah.
I mean, that sort of mechanism could capture the hearts and minds of people across different communities, obviously governments as well. So, how likely is that sort of thing to get up, and have you thought about lobbying different groups?
Right now, it would cost for the RFID tags, etc., technology about 5 cents each time you do it. So it's still too expensive. In about a decade, that cost will probably be 5% of a cent. When it so we're still 8 to 10 years away from being able to do this effectively. But in 8 to 10 years, we'll be able to have that so that you can have a micro tag on the bin. When you buy something, it's allocated against your account. If you don't throw it in the bin, you don't recycle properly, then you lose money. Which, if you want to lose money, there are plenty of kids and homeless people who'll pick up your trash and get a.
That's right.
When I was a kid, we used to collect cans and get money from them. So
absolutely, so did we.
Yeah, I went to a Guns N' Roses concert, I think, based on the fact that I collected cans.
Yeah,
he's still collecting them today, just for New South Wales service.
Yeah,
New South Wales.
Craig, I just wanted to say, love your work, mate. Nathan's my name.
Thank you.
Work, mate. Always follow you.
Thank you.
Thanks for coming back.
Thank you.
Always follow you on Twitter. We're there, mate. We keep on hitting refresh.
We like how you went to the gym the other day.
I've been doing more. I had people complain about my weight, so.
Wow. Full profile and all.
We saw the Twitter post, mate.
All I have to say is, Greg called me fat, and well, I have to do something when Greg starts calling me fat.
Love your paper, by the way. Had a really good read of it. Yeah. So I only understood about probably 10% of it. Like pictures, like the pictures. But yeah, the super nodes or the nodes that are coming out in the future, I think that's going to be really interesting how you might select them as well, or if they select themselves.
Well, just select themselves. It's all economic. The idea is people make money and they use, and they're part of the network. And it self-selects. When you are no longer profitable and you're not able to keep up, then you stop doing it, the same as you stop mining. Very few people mine using their CPUs anymore, so all economic.
Yeah, no, excellent. I was just surprised to see, people. There's like 500 downloads. Like people are just unaware of what's happening in this space.
Well, everyone's been told this can't happen. I mean, this is why we wanted to make sure that we had independently on the 1 gig blocks before we released what we did, which we did earlier actually. So that paper is actually pre-August. But then there's no arguments. It's already been independently verified up to sort of 50,000 transaction per second level. So it happens, it works. There's none of the core stuff saying it'll never work. It's very easy. You just test it and do it. You don't sit there telling people what they can't do. If you let people fail on their own. Failure's a good thing.
Armies of trolls after everyone.
So Craig, next year I'll be taking it to the TV, to the media, mate. So go on mainstream with it on the news. So
good.
That's one of the.
Yeah, these guys are inventors here, right? So do you want to talk about your farm?
Well, we do a lot of stuff in the space, and it's something I only got into recently. Over the course of the last 12 months, obviously there's a lot of early adopters in it still, but very, very awesome concept, idea, and game changer, and it really, a lot of character that I see, and it's something, that's why I follow you so closely, and yeah, it's something that I believe that mainstream is starting to capture onto the whole scope of what we're at, but I think it hasn't been adopted by being out there in mainstream media, and my intention is to get out there. And I'm in the TV all the time, but I plan on taking this mainstream from that end. So
good.
You heard this guy Nathan Birch. Have a Google and see what he does. But he's certainly someone that you should look out for.
That seems a centralized property.
They don't normally have.
Okay, good.
Yeah.
Craig, thanks for your time. You're very generous. We're going to have a final, just a little photo here with you. So the whole group of us.
Okay.
Do a selfie.
Thank you, Greg.
Yep. You're welcome.
We're also videoing as well, so we capture it. All mediums.
Do you want to be on the big screen or the small screen if you want to do a selfie? Because you might fit more of you in.
Do you want me to take it? Yeah, that'd be great.
CoinStash is back there vaping, by the way.
Making history.
Making history, mate. Making history.
Thanks, Craig.
Thanks, Craig, mate.
Craig. Take care. Have a good night. Have a good day.
You too. I've got to head off now, and
you go to the
thank
gym,
you. Sorry, I did that this morning.
Mate, wake me up when crashes 10G. Have a good one, mate.
You too. See you later.
Thank you. Bye, Craig.
Bye. See you all.
See you, Craig.
I hope that's not your brother.
Thank you very much. Well, it's sort of fluctuating. When it was crazy before, a lot of people are getting burnt now, and the ICOs. If the deals will get done. Yeah, it's like I'm not going to move it.
I think anyone else knows it like a moment.
Like everyone thought that a success except you. He's a clean. He's got clean.
Yeah, what I generally do is yeah, exactly. That's right. I'm sort of making. Yeah. All right. Yeah. Yeah. No, I don't think so. You just got to pick it up. Can I work? Yeah. So I work in partnerships.
Hey, bro, well done. You guys MC. Good job putting the event together.
Yeah. He's gone. Gone already.
Oh, he was there.
Yeah.
No, John.
Which one? Oh, this guy he pulled out. Yeah. He couldn't. He said he had another thing that he was supposed to. So yeah.